Let's go. A quarter for 250,000, 250,000, 3 A's. Take them. A quarter, a half, 250,000 up. Ladies and gentlemen, this is the beginning of the end of the year. We're coming into the last quarter. I just have to tell you, Dan Ives, the #1 tech analyst in the world, let's be clear, came all the way from Korea, Malaysia, all around the country, future-proof to come and hang out with me. Now, realize that he is the best dressed man on Wall Street. I am a close second. That's by my own admission, okay? But what's so important to us is, look, Dan is the sneaker man, right? Dan is the sneaker. Look what we've done here. I have taken it upon myself to make a sneaker for me and Dan. So this is Dan Ives' sneaker. Now, I don't know if you all know this. Dan loves ice cream. That's Dan Ives. Dan loves pizza. Dan loves French fries. There's Dan. Forget about it. These are a limited edition. I know the phone's going to be ringing off the hook. You want a pair? You reach out to me. This is me, the Einstein of Wall Street.
Sick.
Now, the only thing that Dan doesn't have is a badge number because he's not a broker on the exchange, but we are going to make him an honorary badge, and we're going to have to pick a number for him. It says 588. There's your bullish chart. There's your Einstein of Wall Street. There's your box of sneakers. And there you go, there's me. Anyway, ladies and gentlemen, these are the hottest items. We're talking a Nike collab, forget about it. Okay, let's get down to business. Let's get down to business. So, it's been 2 weeks since Dan and I spoke last, right? He was here literally at the end of August, and he went on a trip around the world trying to talk and explain to people what's really going on. We have been together now probably for 2 or 3 months, and Dan has really given us such clarity. You all who've been listening to this podcast over and over, Einstein and Ives, have so much clarity, if you've listened to him, about what's going on in tech, how that's affecting the S&P 500, and really going up against all the doomsayers and those who are calling a depression and a recession, and the pullbacks in tech and all this stuff, when Dan describes that we are in the second inning of a beautiful long game, right? Let's go back for a moment. I'm going to use a couple of the great Dan Ives analogies, which just have become so powerful to me. We've only seen in 2024 a few pullbacks where the bear has peeked out from behind the curtain and came out and said, I told you so. It happened in April, it happened in July, it happened on August 5th, and it happened in the first week of September. Imagine that. Right? Ladies and gentlemen, he's sitting there eating popcorn, running out of popcorn because he has not been able to come out of the cave because the bulls have been in charge for month after month after month, no matter what anybody says. He's been away. So let's talk about what's happened. We know that all eyes have been on the Fed, right? Let's go back. I'm going to go back for 1 second to August 5th. We know what happened on August 5th. And it wasn't the last time. It was one of the few pullbacks that we've seen, but it was a significant day, okay? We saw that Wednesday was a Fed meeting that was very anemic without any clarity about what was going to happen this past Wednesday about the cutting of interest rates. Then we saw Thursday, the labor numbers came out very disappointing, 114 versus 170. Then we had Friday where the escalation of the war between Iran and Israel really caused some scare in the market. Then we had the carry-on trade, which was initiated by Japan raising its interest rate, a crash of the Japanese stock market, and then the VIX going from 20 to 60. We came in here on a Monday morning down 256 handles. That was the low of the day. We spent that day and the next 2 weeks clawing back into positive territory into the middle of August. Then what happened? Tell me what happened then, because the last 2 weeks of August, and we haven't really spoken since then, was, I don't know if it was a rotation, a consolidation, a pullback. But while you were gone, those 2 weeks in August scared everybody to death. Right? We were 9% off the highs in tech. Everybody started really talking about fear about, oh my God, Nvidia's already off its highs, the game is different, the economy's not so good. And they really started to overanalyze and get really negative about tech, and all that enthusiasm was gone. You were gone for those 2 weeks in August. What happened in your mind in August?
So first of all, it was a front-end loaded sell-off. You basically had the September sell-off happen the first 2 days of the trading month.
Right, I want you to go back before that. The last two, after that clawback from August 5th that big sell-off on Monday. We had 2 weeks of a claw back to a nice territory, and the last 2 weeks of August, we saw the market sell off.
Because again, going into September with worries about what the Fed was going to do,
Right.
election, September never just a good month for the market.
Right.
There were fears like, okay, the market highs for the year are done in August,
Right.
and it's just going to be a grind, volatility, and probably ultimately softness as we go into year end.
Okay.
That was a consensus view. Institutions, if
Okay.
you look,
Oh, wow.
pull back off tech. I think the risk-off trade, everyone had for the elevators.
Okay.
You went into Labor Day.
Right.
Then you come out, first 2 days, massive sell-off.
Right, massive.
So then
the
there's
first week was, sorry to interrupt you, but we came into Friday or into Labor Day, the first week of September, and they actually said this was the worst week for tech since COVID.
Yep.
That is a mouthful.
Yeah.
Go ahead.
And then I think a few important things happened.
Okay.
One, and we were in Asia, but the supply chain checks coming out of Asia,
Right.
demand outstripping supply, 15-1.
Okay.
3 to 4 months ago, it was 12-1.
Okay.
So any worries that the AI trade, the NVIDIA trade
Right.
was dissipating,
Right.
it was across the board from a supply chain perspective
Right.
that demand's actually accelerated.
Okay.
Two, you started to actually see, in terms of fundamentally, whether it was Oracle, other software earnings,
Right.
you know, Palantir joined S&P 500.
Right. Beautiful.
That really, the AI use cases, the second derivative,
Right.
are now starting to play off.
Okay.
Third, Jensen, when he spoke at conferences, that was the first time publicly that he spoke since earnings.
Right.
Basically saying demand is
Spectacular.
actually is not just spectacular. It's almost hard to get our arms around.
Really?
So I think investors, the setup there in that first kind of week or two of September,
Right.
you start to recognize like, whoa, this tech trade, it's not ending. It might actually be just beginning, but we need to get the sense from the Fed what their next move
Right.
is. And I think once you start to see the kind of breadcrumbs that Fed was basically going to be dovish,
Right.
potentially 50 bips that started to get
Right,
factored
right.
in, and ultimately that's what happened. And that ultimately is a cascade because now China essentially cutting
Right.
and loosening financial. You're going to see it across the border around the world. And what I believe this sets up for, I think, a rip the face off type tech rally
Yes,
into year end
Into year end.
with fundamentals that I think continue to support everything we see from Apple on the consumer side
Right.
to Google to of course NVIDIA. Tech going, we think 20,000 NASDAQ.
Okay, so let's go over this one more time because it started in April. We've seen that every pullback that we've had in the market, April, July, August 5th, and the first week of September, which Dan just spoke about, because the week after that week, which was the worst week in tech since 2020, turned out to be the best week since 2020. The paradox is so funny. We're in this level of catastrophism
Totally.
that's so crazy. It's the greatest day, it's the worst day. It's the biggest earnings, the least earnings. However, what we are trying to make clear to everybody, well, look, markets go up, markets go down. The bottom line is that everybody, the minute markets turn around, we know that NVIDIA went from 108 in February 23 to 900 in February 24, and great earnings in June, and 1,200 in a split with a buyback and all that kind of craziness. In April, the stock got as low as 76.
Yep.
In August 5th, it got as low as 90. These were like 10, 15, 17% off their high within a couple of days of the high. And so we always joke that Dan says the minute the stock turns, the enthusiasm and the aggressiveness, it's kind of like a what's his name, Nick, like wild actor. Nick, what's the guy with the Fast and Furious? Benny.
Nick Cage.
Nick Cage. It's like, right, it's all in one day type of a thing. Everything happens here at this accelerated level, right? We go so
And you have
high.
watch parties for NVIDIA
Yeah,
earnings.
man,
So
right.
it's just it's the spotlight that's just more and more on it.
We say all this to say that when stocks roll over, it doesn't mean, we always talk about this. Has the story
as you always say,
fundamentally
yep.
changed? No. Then you should all be sitting around with your shopping list. When your favorite leather jacket goes on sale at Macy's, do you run for the hills? No, you walk into the store and you buy it 30, 40, 50% off. And think of it as a sale. That's all this is happening here. NVIDIA went on sale. Think about it now that you didn't buy it at 108, although Dan called it a buy at 108. You didn't buy it at 90 in April because everyone was running from the theater screaming fire, fire. You didn't buy it in August after we have talked to you about the fact that yes, stocks are going to go up and they're going to go down. And when they go down, they may go down. They are not very forgiving. But that doesn't mean the story. Ask yourself the question, has the story fundamentally changed? We had that terrible week in 1st of September. We had that great week, the second week of September. We finally came in on Wednesday and the Fed gave us everything we wanted and more. Did you think that we were going to get a 50? But I asked Steve Leisman. I ran into him on the stairs that day. I said, Steve, did you think we were going to get 50? He said, absolutely not. And I said, what did it mean to you? He said, we just got a freebie. We just swept everything under the rug. We have a great economy. Everybody benefits from a 50 basis point cut.
Pillsbury to avoid soft landing, right? I mean, in other words, like that. And Fed's already going down that path. Rip the Band-Aid off, head
So
down that path.
you did not think of 50?
I think 25 bips that we talked about.
Right.
You knew you're going on a 125, 150 bip cut over the next 12 to 18 months. The fact that the Fed cut 50,
Right.
that's essentially pound the Fed being like, this, I essentially believe, guarantees a soft landing.
Right.
Make sure that they're ahead,
Right.
not behind.
But that's for the first time in a while.
For the first time in a while.
They're always chasing the carrot.
They're chasing, but it comes down to when you come out of a once in a 100-year pandemic,
Right.
with everything that we've seen, as we always talk about, there's going to be sort of roller coaster that they navigate, but now it's an A plus Dean's List for Powell with the sort of cookie and milk in terms of everything that he gets for engineering a historic soft landing. And that's why the only one that doesn't benefit are those bears deep in hibernation, with their spreadsheets trying to figure out why the market and and look, they're trying to find the black swan event. You have $1 trillion of incremental AI capex, and fundamentally, that is the most important thing because you cannot fight that type of spending. That's ultimately going to happen for the rest of tech.
Okay, so I got a question for you. Do you think in any way that the 50 basis point cut was them acknowledging that maybe they missed an opportunity in July and that 25 of the 50 was what they should have done in July and then they lopped it on top on the back of the September cut? Okay, and that's how we got to 50. Because they usually they kind of do what they promise they're going to do. They may wait 3 to 6 months, but there was really, we had a 90% probability of a 25 and a 38 probability of a 50, and we got to 50. That was unusual.
I also think some of those job numbers that came through, I think were a bit surprising to the Fed.
Okay.
So I think if they had some of
the
that
negative,
data,
where that's bad news is good news
and
for
bad
the
news,
cut.
good news
for the cut, right?
And I think the timing of that, ultimately, the Fed recognized, okay, we did miss an opportunity.
We did,
but we're not going to miss it again.
Yes.
And I think and essentially for the market, Santa came early.
Oh my God.
And I think now, as we go. I get election, could Trump be negative for the AI trade, China, a lot of noise. But I ultimately believe that's not something that's going to, this presidential election, it'll be volatility. But I think tech continues to rip higher.
Okay. So right now we are here at 5732 in the S&P. We are at 42,000 on the Dow. We had 1,000, so Wednesday was nothing more than a heart attack caused by the fact that nobody expected the 50 basis point cut. If you look at the graph on the afternoon when the Fed did cut it, it really looked like an EKG of somebody going down for the count. It was up and down 300 or 400 points. What we often see, and my man David Green, my partner, always says it, the follow through is on the day after. Okay, and the day after trade was what the market thinks of the news coming out of the Fed. And that was clear that we are really happy with the Fed because there was a whole narrative that if they cut 50 basis points that the market is going to believe things are worse than expected and respond negatively. They didn't even do that. They couldn't have come farther away from that. So what you're saying is, at the end of the day, in order to preserve that soft landing, in order to really give the market the fire and fuel it needed to continue, that we are doing okay, but the labor numbers, so look, over the last number of months, the CPI, PPI, all that economic data, which they claim are the flags that really point to the inflation story, it turned to labor. Right? All of our eyes and our focus turned to labor. And what ends up happening is once that happened and labor was weaker than expected, which is the catalyst to August 5th, then maybe that's why we got that 50 basis points. So you say Santa came early. We have had every day up since that Thursday, and look, we're a week past the Fed's the decision, and we're going higher, we're inching our way higher.
China.
So tell me about the China thing today.
Because look, if you look,
did they just cut? I mean, the story came out and sort of in garbled terms. Did they cut rates? Is that what they did?
They essentially loosened their financial conditions.
Okay.
And I think the important thing in China is that the consumer is under so much pressure in China.
Right.
And I think this is something that was way overdue.
Okay.
Now that China's cutting, and then eventually you'll look basically around the world that you're gonna.
Right.
Now we're just gonna be in a cutting cycle.
Right.
There will be clearly currency impacts there, but China, you start to see China come out of this doldrum from a consumer perspective. That is just another added lever for
a positive
growth
one for our growth.
Across e-commerce, and that's why I think you're going to be wearing those Einstein 588 sneakers.
Hold on. We're going to be wearing, look,
Listen.
we may not be the only one wearing these sneakers. Do you see this? This is a one of a kind here.
But you're going to be wearing those sneakers running to get your S&P 6000 hat.
Yes, I am. That's exactly right. So that's incredibly exciting. That's what we're looking at. 20,000 on the NASDAQ. We're looking at probably 44,000 on the Dow. We're looking at 6,000. There's a 6 in front of the S&P.
And a spreading across small caps and mid caps, because now you talk about in tech, second, third, fourth derivatives.
Right.
Who's going to benefit now in that multiplier? You're going to have small, mid cap, other large cap names. So it's not just about Mag 7.
Right.
You're going to see a spreading of this wealth.
And we've seen that because look, the Russell's above. Russell was up 0.12. That's insignificant, but we're above 2,000 on the Russell. We're above 2,000 on the Russell 2000. I think it's also important for people to know, because when people complain about inflation, okay, even when it was at 6-7%, they are really not aware that we actually, even when we were at our high, our inflation rate and all the prices we paid for gas and for eggs and everything is still a quarter of what the rest of Europe and the rest of the world is paying. 100%. Right? There are places in the world with 20% inflation, right? So if we've gotten ourselves down from 8.5 to 2.5. We are now seeing that happen where China's cutting theirs. That's going to cause an after effect in the rest of the world.
And you have best house in the neighborhood, right? In other words, like when you look at the U.S. markets,
right?
I think it's just going to continue to outperform global markets.
And think about it too. We know that there are billions of dollars on the sidelines. There are people who have not been able to buy into this story at all, right? They are the ones, the inveterate bears who just never believe that the economy is good. Maybe they're on the right side of the political coin and they're just anti anything that my man Joe Byron does or whatever. But at the end of the day, we're looking at recession, the inverted yield curve, that everything was way worse than it was. I get it. See, people love to blame certain people for our problems. I blame the situation. The reason we had the inflation we did was COVID. It was situational. It wasn't personal, right? And at the end of the day,
would you rather inflation or breadlines?
That's exact. See, we agreed. That's why you and I are on the same page. Yeah, look, whatever you think of Jay Powell, if we had not printed the money we did, think about it. In 2007, we printed $800 billion to bail out AIG and all those firms, and it took 9 years to get back to even. We took $800 billion on a stimulus during the great financial crisis, and we put it in the market over 18 months, and it took 9 years to get back to even. In COVID, We put $3 trillion into the market over 3 months. We were back to even by August. We were up 20% in 2020 and 28% in 21. If we didn't do that, and yes, did that contribute to inflation? Absolutely. But if we didn't do that, we would all be on breadlines.
That's
no question about it.
But it goes back to, as me and you've talked about, from financial crisis, whether it was TARP or
Right.
to what we saw in COVID. Inflation, you could, based on policy, ultimately get calmed down. And that's essentially what the Fed has done, got
Correct.
under control.
Correct.
They've learned from Volcker in the 70s what could happen.
Yes.
And it just speaks to my view. The other thing that you have here, you have a fourth industrial revolution
Yes.
playing out at the same time. And that's why tech, in my opinion, continues to lead the market higher.
Right.
And I just think, like, I get value and like cyclicals and things that maybe underperform. Right lane, minivan, 40 miles an hour with a beat up radio. I'd rather pay.
Volkswagen bus. Perhaps.
Perhaps. I'd rather pay up
Right.
for tech in the left lane in a
Right.
Bugatti
Right.
going 100 miles an hour.
You know what? It is a beautiful thing. And look, we're seeing Dan's story play itself out. We have seen the bumps in the road, and each time we had a bump, Dan said, take it easy. This is part of the growing pains of what we're doing. And he said, still have confidence in the process. And once again, we've seen that happen, and he and I have been doing this for the last 6 months. And each time we saw it, he said it, and we've gotten over those impediments to the runway. The runway is clear. We are in a 767 taking off from New York on our way on a beautiful Caribbean
When you have
vacation.
turbulence over the Midwest, do you
Right.
turn back?
No, right?
Or do you go to California? The point is, I'm not saying that it's all smooth. And we will, just like the Tokyo Black Monday, we're going to have some of these scares.
Right.
But the path is higher.
The path is
the
higher.
next few years, as Fed's cutting, you see the world cutting rates,
Right.
risk on, in a fourth industrial revolution. And I think that's a scenario that's just bullish, and it will create opportunities for those winners.
Always look for the opportunity. The cup is always half full. Look at this guy. The guy lost friggin' 10 pounds. He looks like $1 million. He and I are gonna we're gonna go shopping. I think we're gonna go down to Soho. We're gonna wear our sneaks. We're gonna get some new duds. I mean, now the New York Post calls him the best man on Wall Street. There is no question he is.
I
am
think
going
you
to
might be
aspire.
best dressed
No
with
means.
those sneakers.
Well, we don't have them on yet. Next time you see us, we're going to be wearing our sneakers. This is look, you heard of Jensen, right? This is best of breed right here. The best sneakers in town. Collaboration of Einstein and Ives and Nike. I love you. That's all we got to say about that. My man.
Awesome.
To the moon, Alice. I love you. There you go. And that's all I got to say about that.